Wednesday, September 4th, 4:03 p.m. New York time. Welcome to Winning Wall Street's Money. This video is going to discuss day trading options that are referred to Zerodte. If you don't know, I'm going to share with you. Options are a form of derivative. So you might hear me say derivative, options, it's one and the same thing. But specifically, we're going to look at the option trades I did day trading today, the options that expire the same day. I'm going to test you again. Pay attention. That's referred to Zerodte. Zero. They expire the same day. You have smaller capital and you want to participate in the market. I'm going to show you how you can do that too. I choose index options. I choose the ones that have the best liquidity, best spread. You can do that with big accounts and small accounts. But I'm going to specifically show you with small accounts here. Stock symbol, Sierra Papa Yankee. There's a stock ETF, Sierra Papa Yankee up here in the top left. It has options on it. It has options that expire daily. Not all stocks have options. Not all stocks that have options expire weekly. The bid and the ask. Very tight spread, typically 1 penny wide. That's outstanding. Outstanding. Now, because it's the SPY, the strikes are in $1 increments. If you trade the larger financial product, the SPX, they trade in 5 strike increments. Yeah. So there's less wiggle room on the larger financial instrument. First, on the SPY, you could adjust that penny by penny. Well, on the SPX, it's 5 cents by 5 cents. So I did a bullish trade today on the SPY. Bullish credit spread is on the put side. I say again, bullish credit spread. It's on the put side. And the spread I did this morning was selling the 551 strike and buying the 550 strike this morning. I did not stay in it all day. Yes, the U.S. stock market's closed, but this financial instrument, the price is still moving. Give you some insight. Stock ETFs that are indexes like the SPY, they close, or I can say they continue trading for another 15 minutes after the market closes at 4 because they're indexes. There's a lot of calculations. That includes the options. So I could be getting in and out of a trade still all the way up to 415. That's why you still see prices fluctuate. They're just readjusting all the calculations because there's 500 company stocks inside of here. So down here, I have queued in the credit spread I did this morning. Again, selling the 550, buying the 550. Shorting the 551, buying the 550. So shorting the strike had a higher premium versus the one I bought. So that was a credit right here. See 551, shorting it and buying the lower one. Big difference price. Well, this morning when I was putting on the trade, I wanted to collect a minimum of $30. Yeah, you might see it say here 36 cents. Well, if you know options, if you know the specifications of options, these options are representing 100 shares. So you simply time that, and that's $35, $36. Okay. So every movement here is actually $1. And then within there, get 100 shares, 34 cents a share. Well, I wanted to collect a minimum of 30. And the price was moving between 27, 26, 31, moving fast. So the price I wanted to collect, I locked it in, did a limit order, sent it out. And again, I had this locked in at 30 because it was trading between 27 and 31. So I locked in at 30. When I sent the order through, it got filled. It got filled at 31. That's good. I earned that extra dollar to help cover more of my commission. That's a great thing. Yep. I didn't get filled lower. You're going to get filled either at or better. I got filled better. Again, that's a good thing. So now you see the stock ETF closed 560.79. Correct. That's closed, but the options still have to do calculation. So this is no longer trading. I cannot trade the stock, but the option, like I said, of getting it out. Okay. Well, since I sold 551, shorted, I needed the stock to go higher and for the value of the hair to melt away. And it did. When I got filled, I put a working order to close it for half. Actually, I closed it for $15. Yep, $15 per spread. Well, you see right now, it closed below that. So if I stayed in it, I would have been losing. And the one strike wide is $100 margin. When you do the SPX, again, it's 5 strikes wide, it's $500. Let me show you what I was seeing here now on the charts. The top is the daily, the bottom is the intraday 15-minute. The SPX, sorry, the SPY. This arrow here is, again, 15-minute charts. This arrow here is where I went, but I used to trade in and got filled at 10, 11 in the morning. And then as we went higher, my order got closed here at 11 o'clock. 11 o'clock, a few seconds. So I was in it for less than an hour. Yep. And when I was looking at it up here, checking out the option price, I was thinking of closing it before it reached 15 because I kept on seeing it struggle while I was looking at the chart. But you can see it actually went a little bit higher after I closed it. So that's good. I didn't get out at the top, but I got out close to the top. Let's put this on 5 minutes. Good day. 5 minutes. So you can see the 5-minute candle. There you go. Yep. Closed right there, somewhere between these two candles. Or I joined that green candle, went a little bit higher, and then huge dump. So again, this yellow horizontal line, we're back to 15 minutes. That was a strike I was in. And I needed the stock to go higher, which it did. But if it closes below that, again, the plan is not to stay there all day. I would have been in a loss. And that did not occur, thank goodness. Well, then you had that reverse, but I didn't get out of the trade during that reverse. On the top, daily. Well, look at here. SPX has not filled that gap down there yet. And the VIX higher. Well, this morning, there was a divergency. Early this morning, one of them had not, after the market closed, I had to take out the other one yet. Well, when I was here, why did I decide to take that trade? Let me open this a little bit more. About 2 days. When I was looking at the trade and put it on, I was seeing buying activity. Buyers are stepping in here. Consolidation. And that red candle happened to break above that green candle. Nice. So again, I'm thinking it's going to go higher. The VIX goes lower. ADD was going higher. And we were above the zero line. A lot of bulls. So again, took that trade. I wasn't looking to be in it for the max because I didn't expect it to continue going up. Yeah. Nor did I want to stay in front of the computer all day long to take the trade reverse on the downside. That takes a lot of the mindset. Going back here, you still see price activity. And look at this. It's higher. One more thing to show you here. Put this back on 5 minutes. But I want to put it on 1 day. There we go. A lot of volatility, a lot of volatility. There was economic news released today. I waited till after the economic news to put the trade on. Yep. Between 9:30, 10 o'clock, 10:30 was economic news. And I waited till the end of it. I think it was the last one was 10. Zip, got out of it. And then you see what happened here. Massive consolidation, breakout trend. So again, I'm looking to get in before the trend takes off like a rocket ship so I can capture most of that credit, profit, gains. Whatever time frame I'm putting this on, I'm looking for that sweet spot. Consolidation, make a determination. Am I bullish or bearish? I'm going to put this back now in 15 minutes so you can see. Look at that big red candle. Big wick down there. A bunch of buyers stepped in. Inside candle. Indecision. Breakout to the upside. Well, if you just notice, I showed you multiple time frames. Nothing wrong with managing it on the lower time frame and looking for your trades on the higher time frame. So now you're more informed than many other people. If you want to get access to the video the same day, well, I posted on my Patreon page, the link's below. If you want to get deeper insight on charting, I show that as well on my Patreon page. Thank you for taking the time watching the video. That's it.